Hello everybody. So this is Sunday day, and this is a video about, of course, the upcoming buy of Michael Saylor at MSTR. Although we don't know if that buy is going to happen tomorrow or the week after. It all depends on when they get the phone. So I'm not going to go out and say exactly when that buy will happen. Tough to know. Last time he surprised us doing it a week later. So that's just one point. The most important thing that I want to say today is that they raised again the IPO, and the IPO of the Stretch ATM, the Stretch offering, the Stretch Preferred, was raised to 2.5 billion. I saw things circulating on Twitter, unofficial Bloomberg transcripts of some kind circulating up to 2.8 billion. So how much are they really going to raise? Because there's an option in this thing, but it's going to be more than 2.5 billion as of now, and this is what they are advertising. Of course, this is meaningful because that means that out of all of the IPOs, this preferred is the best of 2025. It did more than CoreWeave, and you may remember CoreWeave was all over the news. It did more than Circle, like they IPO'd more than Circle. They did better than the Shift4 preferred. They did better than their own preferred, and the Stretch IPO is actually also likely going to be higher than Figma, maybe twice as high, two and a half times as much money raised as Figma. And I made a video on this channel about Figma, saying it's an interesting IPO. Well, it's kind of a joke when you have a company whose single IPO is 2.5 billion. By the way, a lot of people are saying that this upcoming buy could be as large as number 4, number 5 in the ranking. Like, this could be a huge buy. This would be a buy that would be enough to grant you a rank number 4 in the Bitcoin Treasury company ranking in a single buy, in a single week. And so this is pretty darn impressive. Michael Saylor has opened a black hole in the currency pool, in the currency segment of the capital market. Of course, this is the chart I always show. This is the Bitcoin 24 model, where Saylor outlines his long-term view of capital and where Bitcoin is going to hold. And in this model, of course, currency is purported to represent 130 trillion. Stretch is going after that currency. It's also disrupting a little bit of a money market accounts, that's for sure, but Stretch is a hybrid who is also acting like a TradFi stablecoin, or a stablecoin for corporations, as I've called it. Not on-chain stablecoin, but it's kind of a stablecoin in your broker if it's going to trade at $100 plus or minus 50 cents, which is really what they're shooting for. They really want to be close to that $100 mark. And so I'm very surprised by how successful Stretch has been and currently is. And what that tells me is, going back to the fundamentals of behavioral economics, is that the folks really love downside protection. People love downside protection more than is rational. And so this is your classic prospect theory, where if you make $50, you're like, whatever. But if you lose $50, it's the end of the world, right? If you walk down the street and you find a $20 bill, you're like, hey, yeah, great, a 20, whatever. But if you lose one, oh my goodness, you are not going to feel good. I feel this in the comment section. Whenever MSTR is down like 5%, everybody's complaining. You see it on Twitter, you see it on X. People experience oversized hurt by the losses. The losses create way more pain, and that pain cannot be offset by a gain of a similar size. The gain has to be 2 or 3 times the size of the loss in order to offset the gain. That's prospect theory. That's Daniel Kahneman. If you go back to these books, I don't know if people still read books these days, but Thinking Fast and Slow by Daniel Kahneman. He's the Nobel Prize that kind of started this whole theory here about joy of gain versus pain of loss, and the pain of loss is much greater in Homo economicus, which we are. So Saylor, did Saylor create the perfect instrument for your average TradFi investor, for, say, not the viewer of this channel, for, say, the viewer who's really all about downside protection, for the person who you always heard say, oh, well, Bitcoin has risk, Bitcoin has downside risk, it's too volatile, people who complain about volatility because they only think about downside volatility? Did he create the perfect instrument for that? And, it sure seems like it. If I compare, and this is from their IPO slide, right? Their slide, they're expecting to have 9% yield at par, and so that's after the launch, about a 9% yield for a stock STRC that should be stable, that should be trading at 100, and then you get a coupon, a dividend coupon of 9%. And of course, over time, this should go down, especially as interest rates drop, especially as ATMs, that thing, and kind of takes money in from the currency markets, activates the black hole from the currency market to MSTR, who then turns around about Bitcoin. But anyways, 9% yield to begin with. I want to point out, this is the S&P 500 going back, like way back, with dividends reinvested. You're at 8.8%, and that's standard. Like, people, when they talk about the S&P 500, all of the FIRE movement folks, they will tell you, it's about 9%. It's between 8 and 9.5%, 8 and 10%, depending on the period that they pick. But it's typically like that. And if they tell you after tax, right, they will tell you, oh, well, this is XYZ after tax. After tax, it's actually much lower. Don't forget that qualified dividends have a better tax treatment in the United States. You can actually put aside something like close to 50, a little more than 50,000 tax-free if you have a qualified dividend, or almost 100 if you're a married couple filing together. So that's another advantage of these instruments for the FIRE movement. I believe these instruments for a FIRE movement are actually much more advantageous than even buying the SPY, where you have to pay capital gains, which is not taxed as favorably as a qualified dividend in the case of someone having the only income. So I think these instruments are going to make a lot of competition for even the S&P. Moving on also to this observation of downside protection and people loving downside protection. Let's look at CoinMarketCap. Do you know what is the third biggest cryptocurrency out there? Well, and of course, people swap between Tether and USDC. Very equivalent. If you add up the market cap of USDT, Tether, and USDC, you add up that market cap, you're actually number 3. You're the number 3 cryptocurrency. If you add stable coins are number 3, and there's smaller stable coins that you could add to that, but they are right after Ethereum, and stable coins are predicted to grow much more quickly than, say, the BNBs or the XRPs of the world. Solana, I don't know, but at least a lot of crypto stable coins are predicted to 10x, right? That's the genius bill. That's the whole point. People love stability. This is what Saylor nailed with these instruments, is they love that stability. And if you take into account that Tether or USDC, of course, doesn't pay any interest because I guess the local banks didn't allow it in the Genius bill, so that's not even going to come. Of course, Stretch pays interest, so it's a TradFi stablecoin. That's the way I'm going to refer to it. And so all of this to conclude that this is a big deal. And now the next day, right, to really look forward to for MSTR, well, as I guess tomorrow, and we'll see how much he buys, but it's really Thursday. Thursday is the next big day. Thursday, what's going to happen is the market going to be spooked because analysts are still expecting a loss of 7 cents, while people who are more informed about the fair value accounting changes that are going to happen in Q2 are actually expecting $14-15 billion gain to be reported. And so could this spook the market to the upside? That's the big question. I'm still going to say no. Historically, MSTR for the past few years has not really reacted on earnings, neither to the downside or the upside. The stock has never really reacted on earnings, so I'm still going to keep saying it's not going to happen. But we could have a spooking of the market if those algos just turned into overdrive, and it was like, what's going on? We were going to lose 7 cents, and now they're making so much money all of a sudden. What's happening? So anyways, this was not financial advice, not investment advice. This is only entertainment on this channel. Hoping you were entertained. Please like, please subscribe. Thank you for watching, and have a wonderful, wonderful day.